Hi everyone, my name is Simon Misiewicz and I wanted to talk about the Department of Work and Pensions. Basically, I want to look at state pensions, what they are, what you're entitled to, and what happens to those pensions when you die. Not a glorious subject to talk about, death is it? But we need to talk about it. If you're looking for tax calculators to help you work out how much your tax liability is in the United Kingdom or the United States, then feel free to use that QR code. There's a link in the description box as well. Let's talk about the state pensions and the basics of them. Now, you retire for both men and women now at the age of 66. Now, there is aims to push that up to 67, 68, 70, whatever it might be. So we have to think about that. Now, to get a state pension, you must have made NIC or National Insurance Contributions for at least 10 years. To get a full state pension, you need to have contributed towards your work pension, NIC employment or self-employment for 35 years, which is a long time, of course. And we'll talk about gaps later on. What you get currently, this is 2023, I'm doing this video, the UK state pensions provides you with £203.85 per week, which is £10,600, and it is given to you as long as you live. It's almost like an annuity. It just keeps on giving. The gift that keeps on giving. It is inflation proof, so will increase as appropriate depending on the rate that they use, so CPI typically. All right, so that's what you get. Now we need to think about NIC contributions, national insurance contributions, what it is. Employees earning £242 per week or £12,584 will have to pay national insurance contributions towards their state pension. Self-employed, anyone that has profits exceeding £12,570 will also have to make these NIC contributions. There is a trick here though. And this is really important for people that don't earn those aforementioned numbers. If you are an employee that earns between £123 per week or £6,396 per annum, do you fail from making the NIC contributions towards your state pension? The answer is no. Even if you earn £6,396 and above, which is below the £12,584, you will still be deemed to be contribution towards your state pension, but you won't have any deductions taken away from your wage packet, which is really interesting. And I typically use that for our clients who own limited companies. So make sure you pay yourself that amount of wage to get this state pension contribution in before it's too late. Self-employed that earns less than £12,570 as well, you don't have to fear, because as long as you make profits of £6,725, which let's not forget is below your personal allowance, so you don't pay tax on that, you will still be deemed to have been making NIC contributions, or NI contributions I should say. NIC contributions with the C already there, Simon. Anyway, limited company owners, as it mentions here, it is important to be on the payroll and pay yourself just enough to ensure your deemed NIC contributions, I've done it again, are maintained for your state pensions, and that is a key thing. However, you may have shortfalls, and I have to admit that there were shortfalls in my contributions. For whatever reason, I'm not quite sure why that was, but if you do not have the 35 years full entitlement to get your state pension, the full state pension, if you've got those gaps failing that 35 years, you can make contributions to them, and I think you can go back 6 years. All right, so that's something that you really ought to consider. If you've got shortfalls, contact HMRC, find out how many years shortfalls you have, see if you can make those contributions, and basically you're bridging that gap. Voluntary contributions, when you might want to make them. So people might say, well, if I've got gaps, so what? Well, the so what is you will have issues of missing out on your estate pension when you retire. Well, that's not really that great. So people that need to make them, it's for people that are retiring or near retiring and they think, oh crikey, I've missed out on my 35 years, I need to make some uplift. So you can certainly do that. You may be someone who lives abroad. You may choose, similar to myself, who living in Spain now, you wouldn't automatically make NI contributions. I've done it right for the first time in this whole presentation, NI contributions. If you live abroad, you won't automatically make them. So you could have a shortfall. So I have to now manually give money to the government for my state pension in later years. So I have to pay that contribution each year. Or you may not earn enough, as I specified before. You may have paid contributions, or you may have a deemed contribution, but if you earn even less than what I mentioned, then you might want to make some voluntary contributions as well to make up for that state pension loss. Now we need to think about what happens on death. Now, certain pensions will pass on to your loved ones depending on the type of pension it is. However, when it comes to state pensions, slightly different. 50% will be passed on to your beloved remaining spouse if you died or retired, deemed to have retired on the 6th of April 2016. But things have changed. So after that date, no, you do not get any retirement benefits passed on to your remaining loved one. You do get some bereavement allowances, but that's not the same as state pension. So you do get some allowances, but it's not the same. So you need to be careful with that. Even if you did get the benefits and you remarry, then those will be taken away from you. So make sure that you understand, if your spouse passes away in these sad times, that you understand as well what happens to your pensions.